In the mid-1990s, the internet was the new frontier. It was a time of boundless optimism and uncharted possibilities. The digital age was dawning, and the world was eager to explore this new interconnected landscape. Businesses promised to revolutionize the world with websites and online services. They envisioned a future where every aspect of life could be enhanced by the internet, from shopping to communication to entertainment. Investors rushed to fund tech startups, convinced the internet would change everything. Venture capital flowed like water, and everyone wanted a piece of the action, hoping to strike it rich in this digital gold rush. Companies like Amazon and eBay emerged, laying the foundation for online commerce. These pioneers showed the world that the internet could be a powerful tool for business, transforming how we buy and sell goods. Even companies with no profits or even a business model were valued in billions. The market was driven by speculation and the belief that the internet would eventually make these companies profitable. All you needed was a .com in your name and investors would throw money at you. The mere association with the internet was enough to attract massive investments, regardless of the underlying business fundamentals. By the late 1990s, the stock market was soaring. Tech stocks were the darlings of Wall Street, and everyone wanted to get in on the action, driving prices to dizzying heights. The Nasdaq index, filled with tech companies, climbed to unprecedented levels. It seemed like the sky was the limit, and the euphoria was palpable. But the hype blinded people to reality. Many ignored the warning signs, believing that the internet would continue to grow exponentially without any setbacks. Many companies burned through cash without making profits, or even revenue. They spent lavishly on marketing and expansion, hoping to capture market share before turning a profit. It was a gold rush, fueled by speculation. Investors were driven by fear of missing out, and rational analysis took a back seat to the frenzy of the moment. Investors believed, if it's online, it's worth investing in. This mindset led to inflated valuations and a disconnect between stock prices and the actual performance of companies. In March 2000, the bubble burst. The reality of unsustainable business models and lack of profits came crashing down, and the market began to unravel. Stock prices plummeted as investors realized most dot-coms were unsustainable. The rapid decline wiped out billions of dollars in market value almost overnight. Companies like Pets.com and Webvan, once market darlings, collapsed. These high-profile failures became symbols of the excesses and irrational exuberance of the dot-com era. Millions of dollars vanished overnight and fortunes were lost. Investors who had bet heavily on the internet revolution found themselves facing significant losses. By 2002, the Nasdaq had lost nearly 80% of its peak value. The dramatic fall highlighted the dangers of speculative bubbles and the importance of sound financial principles. Thousands of tech workers lost their jobs, and optimism turned to despair. The once thriving tech sector was now a landscape of layoffs and shuttered offices. The dot-com crash taught the world harsh lessons about speculative investing. It underscored the need for due diligence and the dangers of getting caught up in market hype. Businesses need more than hype. They need sustainable profits and real value. The crash served as a stark reminder that long-term success requires a solid foundation. But it also planted the seeds for future innovation. The lessons learned from the dot-com bubble helped shape a more resilient and thoughtful approach to building tech companies. Companies like Amazon, which survived, became giants in the years to come. They adapted, learned from the past, and built sustainable business models that could withstand market fluctuations. The dot-com bubble wasn't the end of the internet era. Instead, it was a transformative period that paved the way for the robust digital economy we know today. It was just the painful beginning of a revolution that still shapes our world today. The internet's potential was undeniable, and its impact continues to evolve and expand. The dot-com bubble reminds us, dreams can inspire progress, but reality keeps us grounded. It's a story of ambition, caution, and the enduring power of innovation.